Today I have Miss Jennifer DeLuca from Annie Mac Home Mortgages. We're going to discuss some options for you guys, some strategies for you guys, and please ask questions so that we can learn more about, different things, different opportunities that are available, and resources that they have available as well. So, Jennifer, how long have you been in the business?
It's been about 5 years.
Okay,
Yeah,
that's
I'm considered, I guess, like still a newbie, and I've been doing it for 5 years, but I'm still considered a newbie to some of the older people that have been working for doing it for so long. But I do have a really good team that I work with, and we're all just so supportive of each other. And I feel like I've been doing it for so long.
it
I've
seems
been
like
doing customer service forever, like since I was
yeah.
12. So it just comes naturally to like help others and problem solve and make sure everyone has a good experience. So.
Yeah, that may be what it is because I feel like you are so knowledgeable, like you've been doing it for longer than 5 years.
Thank you. Yep.
Mhm. So, you guys have this Cash the Keys program. Can you elaborate on that?
Yeah, we do. It is just an amazing product for people to be competitive in the market. As many people know, like going out and shopping for a home, usually there's just not a lot of houses available. And then
Mhm.
when the really nice house does come up, a lot of people want to shop for the same house or put in offers on the same house. So Cash to Keys kind of helps you put in an offer that's really strong. It's allows you to put in a cash offer, so it's not contingent on any financing. There's two versions of it, so you can use it if you don't have a house to sell. That's just a traditional regular cash offer. But if you do have a house to sell and then you also want to buy a house with the money that you have in your house,
Mhm.
we allow you to do that before you sell. So like we're backing you up with the cash to buy the new house before you sell your old house. So lots of
That's
different
amazing.
yeah, it's just really just outside of the box thinking. I mean, you got to be strategic and creative in order to get
Mhm.
your offers accepted in this market, especially. So, yeah, we do have that amazing program that is really successful. Yep.
What is the criteria? Like, what are the qualifications for somebody? Like credit
It's just,
score, income?
yeah, yeah. There's a lot of people confuse it as like a loan program. It's not really a loan program, right? It's just a program. It's just to help you get
Okay.
your offer accepted. So the loan is still a regular loan. So whether that's going to be FHA
Oh,
for cash offer, VA, conventional. So you can use it for all of those things as a regular loan. To
oh,
qualify, it is a little different. Like for example, for you can have as low as a 620 score for conventional, but for the product, like to use the product, you have to have a
mhm.
minimum of a 660. So there are credit score requirements, but
Right.
they're not. It's not really too hard to qualify for it.
Right. So basically, if you were using like just say FHA, for
Mhm.
instance, you could have like a 620, right? Credit
You could
score.
normally, yeah, like in a normal, if you're not using the program,
Mhm.
you could get a loan, an FHA loan if you had that score, but if you're pairing it with the program, we would require a 660 minimum.
Okay, yeah, that's what I
Yeah.
wanted to know. The minimum
Yep.
score required. So
Mhm.
660 minimum. I mean, but
Yes.
still you were presenting a cash offer, so that's still
Exactly.
yeah, that's still
Yeah, and especially like VA as well. I mean, it's just the way it is out there. When a seller has a VA offer or they have a conventional offer, they tend to gravitate towards the conventional offer.
Mhm.
And the reason for that from a seller's perspective is because when you accept a VA offer or a FHA offer, the guidelines for the appraisal process are a
Yeah.
little bit more strict than they
Yes.
are for conventional.
Mhm.
So that's the reason why sellers will pick that, because if they have 5 offers on the table, they're going to gravitate towards that one so they don't have to do like all these different repairs. Right. So
Right.
that's the reason. But if you are a VA buyer, FHA buyer, and you have a cash offer,
Mhm. Yeah.
so that just elevates you to that level where you
Mhm.
actually are competing now for the house.
Absolutely.
Yeah.
Yeah. That is awesome. I didn't realize it was paired with. FHA or
Yeah,
VA.
it is. It's just the program, but
Yeah,
the
yeah,
loan is still the same. Yes.
that's awesome. And
Yeah.
so a 660, that's a hard
Hmm.
stop, right?
Yeah, it
Okay,
is.
okay,
Yeah.
yeah,
So it's
no,
just best to, I mean, there's something out there for everyone.
right,
This might not be for everyone.
right,
It's almost like a puzzle, right? You just have to put all the pieces together.
mhm,
Everybody's different. So everybody's puzzle pieces are different. And you just have to put everything together just to see, okay, what programs fit you? Like what,
right,
whether that's a first time home buyer program, whether that's cash to
mhm,
keys, there's just lots of things out there that you might qualify for, but it's just hard it's not just a one size fits all. You have
absolutely,
to learn more about that person to find out what they qualify for.
and what would fit
Yeah.
best for them, yeah,
Yep.
absolutely. So what are some strategies you would recommend or suggest to any
I
consumer
think the biggest thing
market?
is making sure you get your pre-approval before you're going into open houses or like going into shopping and then reaching out to get
Right,
pre-approved because you're late. You're just too
mhm,
late at that point. They're getting that beforehand, then walking into the house that you love and you're
mhm,
able to put an offer in that day because you're
right,
already set up. That's the
right,
biggest thing I see for strategy, that people miss out on the house that they love because they're starting too late.
right, right,
And there's really no commitment to it. You're not committing to anything by getting a pre-approval. You're just getting information and education and knowing your numbers, your monthly
mhm,
payment, how much money you're going to need, what
right,
program you're going to be using. You know all that beforehand, and it just sets you up for getting your offer accepted when you're ready.
yeah,
Yeah.
yeah. Do you have any other, like, recommendations or suggestions for buyers now in this current climate, in this current market?
Um, have patience.
Mhm,
No, don't give up.
mhm,
There's just not a lot of inventory that we were talking about in the beginning. If so, the house that you love that's move-in ready and beautiful, wood floors and great countertops, like everybody wants that, right? So
right,
you might not get your offer accepted the first time,
mhm,
or maybe you will if you use cash offer, but
yeah,
um you just have to stay at it. Like, I have a closing today at 4 o'clock and this woman was so tenacious. Like, she just kept losing out, kept losing out, kept losing out. She
wow,
did everything she could. I mean, we just kept thinking different ways, and what do we do better next time? And she's finally buying her house today, but if she would have given up, then she wouldn't be. So it's like, you can't give up. You just have to
right,
keep at it and make sure that you're really putting your best foot forward, that you're
right,
ready to put in the best offer that you can, is my advice.
yeah, yeah, and what do you think about the whole interest rate? Because a lot of clients are like, "Oh, they're waiting for rates to drop," and, it
Yeah.
drives me crazy when I hear that. I mean, for me
Yeah.
personally, I'm like
Yeah. Rates are going to go up and down. They've been for centuries, right? So it's like, you just have to get the house. If you can afford it with the
right,
payment where the rate is today, get the house, because the house is going to go up. The house price is going to keep going up. So you could
right,
be waiting for the rates to drop,
mhm,
and maybe they don't drop for another year and a half. And
that's
then you
true,
didn't buy the house. So now that house that you liked is now $50,000 more in price.
mhm, mhm,
So it's like, yeah, the rate might be lower, but now the price of the house is higher.
right,
So now what's really the difference in the payment?
exactly,
Right.
right, you
So I always just say, like, just get the information, find out, okay, if the rate is 6% or 6.5, whatever it is, find out what your payment would be with
right,
that rate. Find
right,
out how much money you would need. Find all that out. If
mhm,
it's too much and you're not comfortable, then don't do it.
right,
Then
right,
don't do it. But if you're like, wow, like, I could do that, my
mhm,
rent's less than that, or my rent's the same as that, or whatever, that's what you need to be doing. People need to be getting the information and finding out where they stand,
mhm,
instead of just watching the headlines
yeah.
and just talking about rate. It's not all about the rate.
Exactly. That's
Yeah.
definitely my standpoint on it.
Hmm.
And not only that, I'm always telling people like the rate on your credit card is probably triple what this house is.
Do you
And
know I saw someone had to send a statement for something that I had to turn in 35%. 35% was the rate for this credit card. I can't.
it's,
I just can't
yeah,
even.
yeah.
It's
But
yeah.
they'll complain about a 6 or 7% rate on a
Yeah.
house. Yeah.
Yeah. Yeah,
So
you just have to find out what does that rate translate into your payment and is it
mhm,
affordable? And
absolutely.
you
I
can
mean,
always
for
change it in
everything.
the future. You just
Absolutely.
refinance or change it in the future. You're never going to be in that loan for 30 years. So
Mhm.
that's just my take on that.
Yeah. What is your thought on refinancing at this time? I know, the rates have dropped a bit and, a lot of
Yeah.
people are kinda, like, in the market for that.
Yeah, I have a few people that their rates when they bought a couple years ago were over 7. So they
Right.
were like 7.25 or 7,
Mhm.
some of them almost even 7.5. So if the rate right now is 6, between 6 and 6.5, then that might be a really good time for them to refinance because
Mhm.
they're going to save a lot of money being in that higher rate.
Mhm.
What I always do is kind of compare, okay, this is your payment right now. And then if
Right.
you were to take this new refinance at, I'm just making up numbers, 6.25, this would be how much money you would save. And then I
Mhm.
leave it to that person.
Right.
Does that make sense to you? Like,
Right.
is $400 savings a month worth it to you? Maybe it
Right.
is. So it just really,
Mhm.
and it's really a good time too for refinancing to pay off debt. Like so many people have tons of debt right now. It's just everything's just so expensive. And, a
Yes.
lot of people are putting things on credit cards and you know how credit cards are. They just feel like they never go away. So
Mhm.
I've been seeing a lot of people taking advantage of that as well. So
Absolutely.
that's the thing. When you own a home, that's your money. So
Right.
you can tap into that. If
Absolutely.
you have $50,000 in equity in your house, so like
Mhm.
the house price went up over time and you have that
Mhm.
money, you can take that out and pay off all this high debt and all that. So I see people doing that a lot too.
Yeah. How do you feel
Yeah.
about starter homes? Because I feel like now everybody just goes directly as a first time buyer after their dream home, and I'm like, "Okay, what
Well,
happened to
that's
the
like
starter home?"
HGTV did that to
Like,
everybody.
I think so, I think that's the HGTV effect.
Yeah.
Yes, I believe that's what it is. It's because it's like, this is your first home, why does it have to be
Yeah.
500,000? Like, I mean
Right. Yeah, no, my take on that, so I can just talk about my personal experience. It was actually my second house, but it was not anywhere. I did not want to buy this house, right? I was actually renting this house at the time, and the
okay.
landlord had asked if I wanted to buy it because he had to sell all of his properties. And I'm like, "Oh, like I really don't want to buy this house." Like, had like the carpets all over, the kitchen was just awful, like, everything.
Right.
So I'm like, "Oh, well, you know what? I bought it." And because it's not long term. It doesn't have to be long
Right.
term. So I
Right.
bought that house for a very good price, very low. My
Mhm.
brother and I, we ripped out the carpets, we painted, we just like made it our own. And I was in there maybe for like 4 years. And then I ended up selling it and I had like $70,000
Exactly.
when I
See?
sold it
Right.
in my pocket. That
Absolutely.
to
Yeah.
put towards the next house of my dreams, right?
Exactly. Right.
So
It
that's
it
my take on starter homes. Like, buy
absolutely.
it, buy it,
Right.
because the time goes so fast,
So
3, 4
fast.
years goes
Yep.
so fast. And
Mhm.
now you have all this money that you can use to put towards that bigger, nicer kitchen house. You have that
Yep.
money to put as a down payment. So yeah, that's what I think about that.
Yep. Yeah. I'm a, strong believer in that. Like,
Yeah.
start somewhere. You know what I mean? Like, you don't have to
Yeah.
start at the top. I mean, everybody doesn't have that capability to start at the top. But
Yeah.
don't just
Right.
not start at all because you can't start at 500,000.
Exactly. Yeah,
Like,
and you just build up. Like I think a lot of people think
exactly.
a mortgage is like this long-term commitment and it's so scary and like the responsibility and all these things,
Yeah, it's
but
like
it's not, it doesn't have to be. If your life
right.
changes, if you get a new job and you have to move or
Absolutely.
whatever, you
Mhm.
can sell your house.
Yeah,
Or
that's what I tell everyone. I'm like, you act like, okay, so yeah, you sign up for a 30-year mortgage. Does not mean you're staying at that house for 30 years.
right,
I
right,
mean, grandmom and grandpa did that back in the day, but I mean,
correct.
that's not the reality now. Most people do not
Yeah.
stay in their homes for
And
longer
yeah,
than
and
years.
I do encourage people to, I mean, turn them into investment properties, like
And yeah.
to have income that comes in. I mean,
Mhm.
to keep going from that property that I was telling you about personally, I, sold that house, had the 70,000, I put it towards the next house
Mhm.
as a big down payment to get into there. I was in that house for about 3 years, and then I turned it into a rental.
Right.
So right now, that property, someone else is paying my mortgage.
Yep. Now
I
you have
get about
income.
$500 after all said and done with the bill, the HOA and all that
Yeah.
stuff. I have about $500 left over, and that goes into my bank account every month.
Passive income.
So, yes.
Mm-hmm.
So,
Yeah.
yes, like I always say, don't overthink it too much. Obviously,
Mhm.
buy what you want. Like, don't
Right.
settle,
Right.
but
But yeah.
don't think in the very moment, like think long term in the future, like
Mhm.
wealth building for your future.
Yeah, I always try to
Mhm.
explain it like buying a car. Like you get a 5-year loan for a car, but who really keeps it for 5 years? Not most people. Most people are
Mhm.
trading that car in, getting a, upgrade in about 2 to
Yeah.
3 years or so. So it's
Yep.
like the same thing, like except for with a house, you're gonna actually have some equity. Like you
Yep.
have reason
Yeah.
to
Yeah. I
hold on.
kind of explain it like a bank account, like
Mhm,
you're every month when you're paying your mortgage, the house that you bought, let's just say you bought it for 300,000, okay?
mhm,
And year 5, now you only owe, 270 or something, whatever it is. Like that difference now, it becomes your money. So,
money, yep.
yes, you're paying a mortgage every month, but you're paying down the
Mhm,
balance,
mhm,
but the house price is going up
yep.
year over year. So that difference in between what you owe and what it's worth, that's
Mhm,
equity, and
yep,
that's your money.
yep,
And that's my favorite part. I'm gonna have like a
yes.
little I don't know what's going on. I have something in my throat. Got it. Um, that's my favorite part about home ownership is
Yep,
equity.
yeah. So,
Yeah.
I mean, any final words to say to the viewers?
I think just don't overthink it and be nervous or scared to get started, right? Like
Right,
there's nothing that you have to lose. You only can gain, right?
right,
You're going to
mm,
gain education, you're going to gain knowledge, you're going to know where you stand. You're going to
right.
know if you have to work on some things, maybe you might need 3 to 4 months to get things
Yeah,
together, or
yeah,
it's like free information, right? Like
right,
there's nothing that you're committing to at all.
right.
I think that's my biggest piece of advice is just like get started, find out
Mhm.
where you stand, find out if you can do it. No one's here to force you to buy a house. Just get
No,
the
absolutely
information and
not.
find
Yeah,
out if it makes sense for you to do it.
absolutely.
Yep.
Absolutely. It is an investment. It is a way to build
Yes.
wealth. I mean, it's
Yep.
just too many pros. And, I hear a lot of people say, well, I don't want to be responsible for things. And I'm like, whenever I rented, I still, even if something broke or something happened, I still had it repaired half the time because sometimes you have a landlord that moves too slow. So,
Hmm.
and I'm going to take care of any place that I live in. So I don't understand that part either when people say, I don't
Yeah.
want to be responsible. Like, why? You are responsible for your rental and like
Right.
you are responsible there for the upkeep as well. I
Yeah.
mean, the landlord is going to take care of certain things, but for the most part, you're responsible for that place.
Yeah. And that's where, like, when you're shopping for a house and that's what I mean by like not settling. Like, if you're buying a
Yeah.
house and like, oh, the roof's old and I'm
Yeah.
going to need a new
Right.
roof, I'm going to need a new air conditioner. Like, maybe if you're concerned about repairs and things that are going to break, maybe you don't buy that house because that one's
Absolutely.
going to need stuff. Right.
Right.
But that's what, people get home inspections and like just to see what to expect.
Mhm.
Um, and that's usually helpful to know like things aren't going to be breaking and
Yeah. I
to
mean,
give
in
you
no
a little bit of
situation
peace of
is
mind.
perfect. You're gonna endure something. Like,
Yeah,
let's be
you
real.
are.
You are. I mean, whether you're renting
Mhm.
or you owning.
And
Your
that's where the future comes in. Like, okay, this thing broke, it's going to cost me $500, but in 2 years from now, you just gained 25,000 because your house went up in value. Like
mm-hmm.
so that
Yeah.
$500, okay,
Mm-hmm.
yeah, it sucks at the time that you have to come up and pay that broken item, but you're making so much money year over year when you own a house over time. So it's like you got to think future.
Yep.
Yeah.
Can't think so short term. This instant gratification.
Correct.
This instant
Yep.
gratification has everybody going crazy.
The
What they
truth.
call it, the microwave generation. Like they want everything
Yeah.
like they're popping a bag of popcorn. Like it can't happen that fast. Like slow down a little bit. So
Yeah.
well, yeah. So how can people get in contact with you if they're interested in Cash the Keys program?
Sure. I mean, I'm everywhere. So on social,
I know.
Instagram, Mortgages with DeLuca, and on Facebook, just Jennifer DeLuca. My phone number, if you want it, is 302-598-5498. I love texting,
Yes.
but you can call as well. And I have a
she's super
website. I mean, all over. But yeah, if you just find me if you can find me on social and DM me, that's totally fine, or call or text.
Yep. Or you can reach out to me and I will get you in contact with Jennifer. She's great. She's very responsive, very knowledgeable, and very easygoing and easy to talk to. So thank you so much, Jen, for your time.
Welcome. Thank you for having me.
So good luck with your closing as well.
Oh, thanks.
All right. Congratulations. All right.
Thank
Talk to
you.
you soon.
Bye.